Follow the money. That is all the International Monetary Fund did. And when it reran figures using a corrected forecasting model, it became pretty clear that America's reign as world economic leader is almost over. Now, the man who accurately figured that out 4 years ago is our next guest, Peter Schiff, CEO of Euro-Pacific Capital and author of the book, How an Economy Grows and Why It Crashes, probably one we should look at right now and read and learn from. So, regardless of how you measure the size of the economy, the good news, I guess, is that they're going to pass us quickly. The bad news is it'll maybe, as the IMF is now saying, before the next president takes office.
Yeah, I think what the IMF did correctly, what a lot of other forecasters missed, is when they look at the trajectory between a Chinese economy and ours, they assume a static exchange rate. And I think what the IMF is doing is making a more logical assumption that the Chinese currency, the RMB, is going to rise. And I think it's going to rise significantly over the next 5 years. And if you couple that with their growth in their economy, they will surpass the United States, I think, before the end of the decade. I think the IMF is saying 2016, but right. I think certainly before the decade is over, China will be the world's largest economy. We'll be lucky if we'll stir number 2.
Let's not go there yet. One of the things that I look at, and take a look at the graph right there, Elaine loves the charts. This chart, I don't think anybody in America could like, because that shows you how quickly the Japanese are catching up to us and how fast they will surpass us. But,
Not the Chinese.
I mean, the Chinese. The thing that I guess I took hope from was that the Chinese own so much of our debt that I figured they've got an investment in keeping us strong. Well, however, you then had the governor of China's central bank come out and announce that he wants to, that he thinks they've got too much American debt and they need to diversify.
Well, they're going to take a big hit there. I mean, for years the Chinese have made the mistake of throwing good money after bad, which is what they do every time they buy more U.S. treasuries.
Now, why? Why does their good money go bad when they buy into us?
Well, because we can't pay them back. And all we can do is print money. But when we print money, it loses value. And in fact, the Chinese are sitting on a pile, $1 trillion-plus pile of U.S. treasuries that they can't sell. Because if they try to sell them, they crash the dollar. But eventually, they're going to understand that that is better. The cost of propping up the U.S. economy is much greater than letting it fail. Right now, there is a belief out there that China needs America because we buy their products. Well, they don't need America because we don't buy their products. They give us their products. They loan us the money to buy them. But if they didn't do that, if they simply let their own currency rise, then the Chinese currency would gain value and their own people would buy their products.
And we would be able to afford them.
Well, we'd be left with nothing. We'd have nothing to buy and we'd have nothing to borrow. And ultimately, America is going to suffer a big increase in prices and a big increase in interest rates because the Chinese will withdraw their subsidy.
And what about the other things that this then impacts, such as oil and gas? And John King was just looking at the price of gas that we're paying right now. It makes you choke on your dinner, almost $5 a gallon.
Well, thank Congress, thank Obama, and thank Ben Bernanke for that. The reason that gas prices are rising, it's the same reason that food prices are rising. It's the same reason all prices are rising. We're creating too much money. The government is running a big deficit, and the Federal Reserve is monetizing it. But what's going to happen when the Chinese allow the dollar to sink, and other countries as well, then all of a sudden you're going to see huge increases in demand for gasoline in countries like China. So from Americans, prices are going to go through the ceiling. I wouldn't be surprised not only to see $5 a gallon, but $10 or $20 a gallon for gas. And that's going to price many Americans out of the market. We're going to be riding bicycles, and the Chinese are going to be trading in their bicycles for automobiles because now they're going to be able to afford the gasoline that Americans are going to be too broke to afford.
Yeah, well, the Chinese are riding the bicycles, and as soon as they can afford the cars, and
they'll make that switch. And the IMF makes one mistake. See, they say that the reason that China is doing so well is because they've got this centrally planned economy, and the Chinese bureaucrats are doing it right, whereas we've got a free market economy. They've got it backwards. We don't have a free market. It's because we have a centrally planned economy where government policy and Fed policy is so distorting market forces. That's why our economy is stagnating. And the Chinese are doing well because they have freer capital markets than we do.
Now, wait a second. That goes against everything that most people think. So you're telling me if you were to start a company in America right now, it would be easier if you instead did that in China?
Oh, absolutely. It's like America, we're giving capitalism a bad name, and China is giving communism a good name, because there's more capitalism in communist China than there is in America. And absolutely, if you start a business today in China, you have far fewer obstacles in your path than you do in America. Now, China's not perfect, but if you want to compare China to America from 100 years ago, China is a lot closer than we are. We have changed. We are now a huge centrally planned welfare state where central bankers and central planners have distorted this economy. And we don't save anymore. We don't produce anymore. We're consuming and borrowing. But the Chinese are doing the opposite.
Now, I know that it's sort of a popular pastime in the world to dislike America, but isn't it true that when people start thinking about China being the world's leading economy and having all that power, the money, the people, the military, all that, we start looking a little bit better? We're kind of sort of that counterweight to China?
Well, I don't know how much of a counterweight we are. I know that when China is going to enjoy far more influence throughout the world because of their wealth.
What do you mean by that? By enjoying influence, does that mean that they're going to be able to tell people what they can and can't do?
They're going to have money. They're going to be able to invest. They're going to be able to make loans. See, America, we're the world's biggest debtor. I mean, the only money that we can give is money that we borrow. And when we can't borrow anymore from China or Japan or Saudi Arabia, our influence is going to be dramatically diminished. But more important than that is going to be our standard of living, because for years we've been living beyond our means. Countries like China have made that possible by living beneath their means. Right. But all this is going to change.
Well, enjoy it now while you can. I'm sure we'll be talking to you more about this. Peter Schiff, thank you very much. The book is called How an Economy Grows and Why It Crashes.
We're in the second part, just in case you weren't sure.
Unfortunately. Coming up, a quarter of Americans still believe that President Obama was born in another country. We sent our own reporter to Hawaii to get the facts. His interesting findings up next.